Meanwhile, the crackdown on capital markets continues out of Beijing. Major Wall Street banks are now reportedly moving to redirect IPOs from Chinese companies from New York to Hong Kong. The move follows Chinese regulators launching an investigation against ride-hailing giant Didi just days after its IPO. For many banks, advising Chinese companies on American IPOs was big business before Beijing's regulatory moves and their heavy-handedness in Hong Kong, among others places. Joining me right now is Wolfpack Research founder and chief investment officer Dan David. Dan, it's great to have you this morning. Thanks very much for being here. Our audience knows that we have been on this China story for a long time. How do you see what has taken place with regard to the Chinese Communist Party and its crackdown on companies going public?
Well, I think the China Communist Party realizes that from our bipartisan, maybe one of the only bipartisan legislations I've seen unanimously supported in my lifetime, on the Holding Foreign Companies Accountable Act, something we've worked on for 10 years, got passed last year. So you couldn't really repeal it in the Biden administration. And I honestly thought that they would capitulate because it's kind of watered down legislation. All they have to do is comply with audits. It's not as if we're asking them to be criminally responsible for the billions and billions that they've stolen from us, hundreds of billions, just to comply with audit in the PCAOB. And it looks like President Xi is looking to control their own destiny once again and is going to delist or make a pathway for delisting of all of these companies. And it just so happens that if they go to Hong Kong, they're not going to have the same cyber agency security measures against those companies as if they come to the United States. So it's once again China playing chess and us playing Chinese checkers, catch up. We're way behind them.
Well, you know,
and
yep. You think we're way behind them?
Well, I think we are way behind them as far as a strategic plan of what's going to happen in the next 2 to 3 to 5 years. Yeah. I mean, if you back up for a second, they really couldn't have done this 2 years ago because they didn't completely take over Hong Kong yet. Now they've done that. So anything going to the Hong Kong exchanges is being controlled by the China Communist Party. That was not necessarily so much the case a couple of years ago. And you have to think about what's the rhetoric coming out of China now? It's Taiwan. When things start up in Taiwan, they can't have trillions of dollars listed in the United States because those stocks would get hurt badly anyway. Whether there's a kinetic conflict or not, that's going to be a problem. So they're focusing and centralizing their financial power, which to them is part of strategic warfare and, you know, financial unconventional warfare, as I've called it over the years.
By the way, Dan, it's all warfare. All of these companies, at the end of the day, the priority for the CCP is the military. There is civil-military fusion. If something works for the civilian sector, the first place it's going to be used is in the military sector because that's what they're doing. That's their priority. They want to overtake the United States as the #1 superpower. Look, I understand that the CCP wants all of the control over everything. They're hiding behind this idea that, oh, we don't want these companies listed and following the auditing rules of the United States because it will give them information about Chinese companies and data about its people. So they're hiding behind that. But really, it's that they want to control everything. Look what they did to the Ant Group. You know, Jack Ma disappeared for 3 months because he made negative comments about the regulatory environment there. So what should Wall Street understand about this? Because you've got a number of financial services companies right now gearing up to open shop in China because they've been given licenses. This is a very important, explainer as to what they may be about to face.
Well, I think the financial services industry is agnostic to politics, and that's what they would tell you. They don't necessarily care about human rights violations. They don't necessarily care about the rule of law as long as they can buy it, which you can in China. So there's really no kind of American, quote unquote, investment bank anymore. They're an investment bank for the world. And that's a shame because they do domicile here because they want to be protected by our laws. but they'll take our money and invest it in China. And all the things that China doesn't want us to glean, supposedly, about their population, they are buying, taking, and stealing from us and the rest of the world. They want all of our personal information, and they want us to have none of their personal information. And it's always been that hypocrisy, that double standard. And their best friends in the United States are the investment banks, are the Fortune 500 CEOs who do not want anything to change for next quarter. It's all about making that next quarter's bottom line and the year's bottom line. And they push hard in Washington for no change. And I think part of this DD message was to the investment bankers that their lobby needs to spend more money pressuring the Biden administration. I do believe they feel like they have a better chance that this administration will capitulate rather than possibly the next administration.
Oh, definitely, yeah, because all of his policy so far, foreign policy, has had no teeth. So, Dan, real quick before you go, speak to investors. What about an investor out there who says, well, maybe I want to buy Chinese stocks because that's where the growth is? And you say what?
I say that there's growth opportunity here in the United States. There's growth opportunity in the European and Canadian markets. And the Chinese Communist Party is telling us what they're going to do. It's not as if they're not even saying it out loud. They are saying it out loud. They're moving these companies back. And I think that our fiduciaries that are running these index funds are not really doing us a service. So for instance, I will handle my father's money. He doesn't have any money in any of these China-based stocks. And that is because of the systemic risk that we have. I attended a SPAC conference in Hong Kong last week, virtually, of course. I'm not welcome there. But there's hundreds of SPAC companies looking to list here in the next year or two. Why? If they're going to be delisted in 2 years. Because they want to steal as much as they can while they can.
Unbelievable. Dan, thanks very much for weighing in on this important issue. We'll keep following it. Dan David joining us there on the Chinese Communist Party and the bad actor that it has been.